Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, and Chaz Price. 419-794-3030 is the phone number. It's 419-794-3030. Online, americasretirementheadquarters.com, or if you find that to be a bit too much to type out, that's fine. arhq.com will work just as well. Guys, let's be honest. Last year was not a good one for the 60-40 portfolio. The mix of 60% stocks and 40% bonds was down almost 20% in 2022, but there's a new study that's predicting the allocation will fund future annual average returns of nearly 7% because, well, they believe bonds are going to be making a comeback. Is that reason enough to stick with or maybe revisit this strategy, or is there possibly a better way to go?
Yeah, I think 2022, I'd say, points out the dangers of having all or too much of your money at risk. So there's this study or that study that say, here's what the expected returns would be. And, at the end of the day, the market doesn't care what those predictions are. The market's going to do what the market's going to do. And, for anybody who's listened to our show for quite some time, I mean, we've been on the radio almost 21 years now. Just going back a year or a year and a half ago, if you listen to the show, we had talked, so much about the interest rate risk that was facing the bond market. And what some of the steps were that people could take that are closer to or in retirement time. The philosophy, first and foremost, that I'd say that people need to be aware of is what is called the independent income system. So the independent income system is, I think, a better allocation for folks to take that are close to or in retirement time. If you'd like to watch a video on that, just simply Google independent income system and click on the link if you're watching this on our YouTube channel, and we'll take you directly to that video. But the independent income system is kind of the belief that we have. Now, here's what I would say is there's a lot of articles that talk about, is the 60-40 portfolio dead? Mm-hmm. And, my opinion is no, because what happened is, yes, bonds went down a lot, but, what we've seen is that interest rates have gone up quite a bit this year. Mm-hmm. So as things calm down and work themselves through the system, some of the approach that's out there of that 60-40 mix might still be appropriate. Again, dependent upon your age, your risk tolerance, but somebody who's more of a buy and hold type of investor, after the market already abused a portfolio, is not the time necessarily to make big changes. Maybe it's the things to think about as far as what's weak in the portfolio, where's there areas to add value to the portfolio, but not abandoning ship. What would you say, Chaz?
Yeah, I would agree. And I would kind of take it one step further to say that, 2022 was a year when not only the aggressive investments got beat up, as you say, but the conservative as well. So traditionally, if you expected to be fairly conservative going into 2022 and experienced a 20% loss, was very unexpected, and it's hard to swallow that. So it's in times like in 2022 that I think the traditional asset allocation or traditional investment choices of stocks and bonds only are just not enough. It really reveals some weakness, and it reveals the need to have some tactical, more shorter-term investments or just a lens or philosophy on your portfolio, because generally I'm just not a huge fan of a 60-40 portfolio. And if you see that your advisor is saying, okay, you're just going to go into the 60-40 portfolio because it's a traditional benchmark, probably thank them for their time and walk out the door, because it's generally rules of thumb just don't intuitively make sense to me when it comes to something as specific and unique as your money. So, that's one of the things that I would add, is that the independent income system, to kind of, build on what Nolan says, is a philosophy that we have whereby your asset allocation is set based on your actual cash flows. And so we do a good amount of what we call discovery in the first couple of meetings to really paint that picture of retirement. Have you described for us what it looks like, what an optimal retirement looks like? And I use the analogy of we're painting some of the broad strokes and some of the sketches at first, but as we go down this retirement journey, we start to fill in some of the details. Where exactly do you want to travel? How much is that going to cost? And as we're starting to develop that financial plan, that budget, if you will, the asset allocation really generally flows from that. It's just essentially, a matter of when you're going to need money and how much. And if we can know that with a great amount of detail, we're going to be a lot better off than just choosing a 60-40 portfolio for you.
Yeah, I think, I've gotten into a lot of different meetings that we've done together. And, if you think about it, the 60-40 portfolio, it's kind of the analogy of driving a car. It's like, setting your cruise control at 60 miles an hour. And, the younger you are, I think the more you could use that, quote, set it and forget it type mentality.
Yeah.
I know with set it and forget it, that was a gift my father-in-law had got my wife and I a couple of years ago.
Nice.
Yeah. So we did get it out over the holidays, and we cooked our prime rib in our rotisserie chicken cooker, and we set it and forget it. But when it comes to your finances, as you point out, you have to be much more adaptive. So if you're within 5 years of getting ready to retire, or you're just into retirement, the first 5 years of your retirement, that's where you need to become more adaptive overall in the portfolio. You can't just go 60 miles an hour when you're dealing with your finances at retirement time. So 60 miles an hour on the turnpike, you'll get run over. At the same time, 60 miles an hour on the back roads might be perfect. Again, depends upon what the weather conditions are out here in Northwest Ohio. I've told my youngest son, who's the newest driver in the family, I said, just because it says 55 miles an hour doesn't mean that it's okay to drive 55 miles an hour. In fact, the other day when it was foggy, I said, hey, slow down, leave yourself some room because it's foggy out. You can back off a little bit. You can't just set it and forget it. The way that we have built it out in our process is, think about it like putting a gas pedal. So when the economy looks negative, we let off that gas pedal and maybe you slow down. I know we're here in Arrowhead Park in Maumee. If you go 60 miles an hour in our neighborhood, you're going to get arrested. You're going to get pulled over, get a ticket because it's a 25 mile per hour street. So if you have a portfolio that you feel that you've set and forget, or if you feel your advisor is set and forget it, now you're the type of person that really should have what is called an independent portfolio analysis. And I've had a lot of people in the last couple of weeks have called the radio show asking specifically how to get their independent portfolio analysis. So we'll extend that offer again. So, for 5 callers that call in this weekend that want an independent portfolio analysis and want to learn about this different approach and how to be more adaptive overall in the market, if you call the office or if you go online, you request that information, we would be happy to do that and kind of show you a different approach. That way you can take advantage of what's happening all in the market. If you feel like you're stuck in a philosophy of just buy and hope, we have a solution for you.
Yeah, and we'll go one step further with that offer is, the Monte Carlo analysis or some of the technology that we use here at the Retirement Guys is just award-winning and sometimes even blows my mind, having been in the business 20 years. Some of the things that we can actually help you plan for. I mean, it doesn't mean that we're always going to be right or that the account is never going to maybe fluctuate in value, but we're going to have a plan for it. And so our software and our technology will allow us to test over 1,000 different scenarios to kind of describe what the possibility is. What are some of those wrecks that are looming there? Some of those potholes that when you're going 60 miles an hour, if you hit, it could, basically drop your transmission in the middle of 475. We want you to be aware of those, and then we'll help you avoid those through just some probability analysis and some very sophisticated tools that we've basically utilized for quite so many years.
There you go. Not just being aware of the possible pitfalls that could happen as you approach retirement, but also ways to circumnavigate to get around those and take care of them, address them. Take advantage of this, the independent portfolio analysis, the Monte Carlo analysis. Just be one of the first 5 people to reach out today. 419-794-3030 is that phone number. It's 419-794-3030. You can also go online, arhq.com, and request it there as well.